Well, you know, over the last several years, I guess, and months particularly, we've had a lot of dismal economic news and a lot of news that maybe really wasn't pleasant to hear, but I think we're beginning to see some real change here, particularly in our housing market. I met with the builders, the home builders yesterday, inquiring about how the market was going, how things were happening, and the tax credit that we had passed in Congress and then extended for another period of time that just recently ran out was a very major help. So we're hearing from our realtors that things are picking up. They're not great. They're not as good as they'd like for them to be, but we're beginning to see some change, some economic change in our housing market, and particularly in our housing prices at the 200,000 to 300,000 range. We're beginning to see good sales and all over the district. And I think what that points out to us is that if we get the money back into the people's hands, they can do more with it than we as a government can do with a stimulus bill. So it means that tax cuts, extending the Bush tax cuts, eliminating the capital gains or a moratorium on the capital gains, eliminating the estate tax, reducing the corporate income tax from 35 down into the low 20 percentile will stimulate this economy. It will not be stimulated by increasing our debt, but it will be by increasing our tax cuts, extending the Bush tax cuts, and putting the money back into the hands of the families. It was demonstrated in our housing market when we put that money back into the individual home buyer. They went out and they did what we wanted them to do. They bought homes, and naturally that means there are going to be furnishings that are bought. There are going to be washing machines that are bought. There are going to be lawnmowers and all of that. And so this is good news. And that's why we wanted to have a little press conference this morning, just to hope that we can tell our viewers in the 5th District that some good things are happening. The business climate in the 5th Congressional District has been good because we have brought very skilled management into the 5th Congressional District with our international and national companies. We have people here from all over the world. They mix and mingle, share ideas. We have high expectations. This is not only one of the smartest districts as far as education is concerned in America, but it's also one of the areas that has international influence as well as national influence. So our expectations for our businesses, our expectations for our arsenal are very high. And each time we set the bar high, we meet that goal and set it again. So it's a climate that business people find very exciting, stimulating, and they want to be part of it. You know, your question's really a good one because every 30 days people get their statements from their brokerage houses or their pension plan, and over the last 24 to 36 months, it's just been a nightmare to open it and look at it. And so the families are opening their statements and looking at it. They don't have the confidence to go out and buy a car or a house. They don't know about the uncertainty, and that's one of the reasons that this district is one of the most healthy economic districts in the United States. We've just been very fortunate. Some economists believe that because our savings rate has really gone up because of this recession, when we do recover, when we do start seeing the recovery, it'll be a robust recovery because people have been holding back, putting off purchases and not doing it. And as they gain confidence, when they do start, it'll be a real robust recovery because it's been the longest, deepest recession we've ever recorded. So this is a jobless recovery. That's another reason we've been very fortunate here. Wall Street, the Dow over 11,000, major recovery over the last 24 months. The reason it's a major recovery on Wall Street you look at Wall Street and you see what the equities have done, you would say, well, wow, everything's rosy again. But really, it's a jobless recovery. What's happening is the company's earnings are good because they're not hiring. Their overhead is low. You see where I'm going? Until these companies have several quarters of good earnings, will they feel confident enough to go out and hire and ramp up? This is in the weeds, but it's interesting to me. 80% of China's market is the European common market. In other words, the consumers in the European common market take about 80% of China's goods and services. Greece is in trouble. Spain and Portugal are in trouble. The United Kingdom's in trouble. Its banking system is on the verge. Okay. If that should happen, and China's market is depressed, then China is going to want to recover its losses in one way or another, and it'll usually be by increasing their interest rates or what they require when they lend money. And one of the people that borrow a lot of money from China is the United States. So what we don't want to happen is we don't want a financial crisis in Europe to reflect or ripple into an international situation where our interest rates begin to increase because we could fall back into or what they call a double dip recession.